Let's start with a hard truth that millions of drivers face every year. Your auto insurance bill arrives and once again, the price has gone up. It feels relentless, doesn't it? You haven't had an accident in years, maybe even decades. You follow the speed limit. You don't text and drive. You take pride in your clean driving record, yet you are paying more and more to insure your vehicle. You are effectively subsidizing the costs generated by a small minority of drivers who are actually involved in collisions. This financial penalty for a spotless record feels fundamentally unfair, leaving responsible drivers wondering where all that money is truly going. The statistics paint a stark and frustrating picture of this imbalance. Show infographic. 9 out of 10 drivers won't file a claim, 90% versus 10%. Recent industry reports show that auto insurance premiums have surged to record highs, driven by complex factors like rising repair costs, sophisticated vehicle technology, litigation expenses. However, the most telling statistic is this: the vast majority of drivers, often over 90% in any given year, will not file a claim for an accident. Think about that for a moment. 9 out of 10 people are diligently paying ever-increasing premiums into a massive pot of money. They will likely never need to access it, all while the insurance giants post enormous profits. It's a system where your good behavior seems to offer no financial reward. This is the core dilemma of the traditional insurance model. It operates on a principle of pooled risk, but the distribution of costs feels anything but equitable. The system is designed to collect as much as possible from everyone to cover the unpredictable expenses of a few. Massive overhead costs are baked into your premium, including executive salaries, sprawling office complexes, billions spent on TV commercials. You are not just paying for potential accident coverage, you are funding a colossal corporate machine that profits whether you have a claim or not. This structure leaves little room for rewarding individual responsibility. For too long, this has been the only game in town. Drivers have been conditioned to accept these annual price hikes as an unavoidable cost of owning a car. The frustration simmers, but the alternatives have been few and far between. We are told this is simply how insurance works, a necessary evil for financial protection on the road. But what if there was another way? What if technology could enable a new model, built from the ground up to directly reward safe drivers for their good habits? A system where you only pay for what is truly needed and keep the rest. Auto insurance costs are surging, up 152% since 2018. California rates could climb 54% in 2025 alone. Show dramatic graphs and photos of rising premiums and aging vehicles. Average U.S. vehicle age 12.6 years. Introduce the hero, Good Driver Mutuality, a smart way for safe drivers to save. Show key services, collision and comprehensive alternative, roadside assistance, transportation assistance. Present savings potential of up to 40% per plan period. Imagine a world where your clean driving record directly translates into money back in your pocket. This isn't a far-off fantasy, it's the reality being built by an innovative new approach called Good Driver Mutuality, or GDM. This isn't another insurance company with a new jingle and a slightly different app. GDM is a fundamental shift in protecting vehicles and finances. It is a technology-powered mutual aid platform with one clear purpose: help safe drivers save money. Share only the actual costs of accidents instead of paying inflated premiums to a large corporation. A return to a community-based model supercharged by modern technology for transparency and efficiency. The concept is simple. Like-minded, responsible drivers pool their resources to help one another after an accident. Cut out the middleman, the traditional insurer with its overhead and profit motives, and the community covers collision damages more affordably. GDM provides the digital framework that enables this, managing the process seamlessly, so members get peace of mind and significant financial benefits without administrative hassle. This directly addresses unfairness in the traditional system. With GDM, you are no longer paying for an insurer's advertising budget. Getting started with Good Driver Mutuality is designed to be as straightforward and transparent as its philosophy. The process begins with getting a quote, just as you would with any other provider. But here is the first major difference. Instead of a single large premium, your GDM quote is broken down into two parts. The first is a small service fee, typically around 20% of the total quote. This fee covers GDM's operational costs for running the platform. This fee covers providing customer support. This fee covers managing the technology. This upfront transparency ensures you know exactly what you're paying for administrative services. The remaining 80% of your quote is not a payment, but a pledge. This is your commitment to the community. It's the maximum amount you might be asked to contribute over your plan period. It helps cover the actual costs of accidents within the group. This money stays yours unless it is needed. You simply connect a secure payment method. Funds are only drawn when a fellow member has an approved claim. This pay-for-what's-needed model is the engine of GDM's savings potential. It completely flips the traditional insurance script where you pay the full amount upfront no matter what happens. So what happens if you are in an accident? The process is just as user-friendly. Through the GDM mobile app, you can report the incident in a few simple steps. The app guides you through collecting the necessary information and photos right at the scene. A real human advisor is available to provide support and answer any questions you might have. Once you submit your sharing request, GDM's team reviews it. If the other driver was at fault, GDM helps you seek compensation from their insurance first, preserving the community's funds. If you need to use the mutuality, your covered repairs are paid for from the collective pledge pool. The beauty of this system unfolds at the end of your plan period. The GDM platform calculates the total cost of all shared accidents for the entire community. Then, it determines how much of each member's pledge was needed to cover those costs. Any portion of your pledge that was not used is yours to keep. This is not a rebate or a bonus. It is your money that you never had to spend in the first place. For the vast majority of members who remain accident-free, this translates into substantial savings, proving that a system built on fairness and community can deliver real financial rewards. Show key services: collision and comprehensive alternative, roadside assistance, transportation assistance. Show stats: 94% of drivers don't have an accident each year, yet premiums rise. The financial model of Good Driver Mutuality is where its true power to disrupt the auto industry becomes clear. By eliminating the profit-driven structure of traditional insurance, GDM creates a system where members can achieve significant savings, often up to 40%. Let's break down how this works with a simple example. Suppose your traditional insurance quote for comprehensive and collision coverage is $1,500 for the year. You pay that full amount up front, and whether you have an accident or not, that money is gone for good. It belongs to the insurance company. Now let's look at the GDM alternative. You might receive a similar quote of $1,500. However, you only pay a small portion, 20% or $300, as your service fee. The remaining $1,200 is your pledge to the community, earmarked in your account. Throughout the year, if members have accidents, small amounts are drawn from each pledge to cover repair costs. You only contribute to actual verified damages, not to a vague pool that funds corporate jets or stadium naming rights. At year-end, the numbers tell the story. Say only 30% of the pledged funds were needed. 30% of your $1,200 pledge, $360, was used. The remaining $840 of your pledge was never touched. It stays with you. So your total cost, $300 service fee plus $360 in claims, totaling $660. When you place Good Driver Mutuality and traditional insurance side by side, the differences are not just in the details. They are in the fundamental philosophy. Traditional insurance is a product you buy. You transfer your risk to a massive corporation in exchange for a fixed premium. That corporation's primary duty is to its shareholders, meaning its goal is to maximize profit by collecting more in premiums than it pays out in claims. Your relationship is transactional. You are a line item on a balance sheet, and your premium is calculated by complex algorithms designed to predict risk and ensure profitability for the company. Good Driver Mutuality, on the other hand, is a platform for mutual aid. It is not an insurance product. When you join, you are not buying a policy. You are entering a community of peers who have agreed to share costs. GDM's role is that of a facilitator, providing the technology and administrative support to make this sharing process smooth, transparent, and secure. Its success is tied directly to member satisfaction and savings, not shareholder returns. This creates a collaborative relationship where the platform and its members are working toward the exact same goal, keeping costs low for everyone. With traditional insurance, you pay 100% of your premium up front, regardless of your driving record or whether you file a claim. The insurer keeps all of it. With GDM, you pay a small service fee and then only contribute your pro rata share of actual community accident costs. The unused portion of your pledge remains your money. For any community-based model to succeed, its foundation must be built on unwavering trust and radical transparency. The team behind Good Driver Mutuality understands this better than anyone. They have meticulously designed the platform to ensure every member feels secure, informed, and confident in the process. This commitment to trust begins with how your money is handled. All member funds are managed through secure, regulated payment systems, ensuring every transaction is protected and accounted for. There are no opaque pools of money. You can see exactly where your contributions are going. This trust is further reinforced by GDM's network of partners. Showcase 5,000 plus certified repair shops, 4.8/5 customer rating, lifetime repair guarantees. Highlight leadership credentials, founder William II, industry veterans. Emphasize partnerships, GHSA, CIECA, NDDD, stress community benefit. A safer tomorrow, powered by responsible drivers. End with strong CTA, join GDM today, drive safe, save more, and protect what matters. Visit the Good Driver Mutuality website, get a free quote, and see how the numbers work for you.